a notification of award for two projects. One from the Oil and Natural Gas Commission, ONGC, for construction of 4 platform support vessels, and from the Shyama Prasad Mukherjee Port, Kolkata, for a electric tug, fully electric tug. Achieving L1 status in 2 projects of varying nature, such as a platform support vessel and an electric tug, reflects our competitive positioning and reinforces our capabilities in these specialized fields. Our current order book stands at 13,596 crores.
I'm really sorry to interrupt, sir. Your audio is getting chipped.
Can you hear me now?
This is much better. Yes, sir. Please go ahead.
Yeah. So, can you hear me loud and clear now?
Yes, sir. This is loud and clear.
Okay. I was talking about the order book. The current order book stands at 13,596 crores, and this comprises mostly of shipbuilding orders, with shipbuilding division contributing to 13,296 crores, and the other 2 divisions, the engineering and the engine division, contributing to the balance of the order book. I am happy to inform you that it is for the first time in the last 10 years that our order book has dropped below 15,000 crores, and I consider it the reflection of an excellent execution rate. The current order book comprises of 11 projects consisting of 44 marine platforms. These include 9 warships for the Indian Navy, 1 P-17 Alpha advanced frigate, 4 next generation offshore patrol vessels, and 4 anti-submarine shallow water craft, 2 coastal research vessels, 1 acoustic research ship. These orders for research ships, again, I'm happy to inform you that we are the only Indian shipyard currently executing projects for construction of specialized research vessels. In addition, we are also constructing a 1,000 meter cubed trailing suction hopper dredger for the government of Bangladesh, 13 electric ferries for the government of West Bengal, 12 multi-purpose vessels for a German client, 1 green tug, and 4 platform support vessels for which we have recently received the orders. So in total, 11 projects, 44 marine platforms. Coming to the status of these projects, the last ship of P-17 Alpha, again happy to inform you that the first 2 ships have been delivered ahead of schedule. The last ship has clocked nearly 85% physical progress of construction, and we intend delivering this ship during this calendar year. By November, we should be able to deliver this ship. 4 of the 8 anti-submarine shallow water crafts have already been delivered, and the balance 4 ships shall be delivered during the current financial year. The 5th ship has achieved almost 91% physical progress of construction. The 6th ship very closely following with 88%. The 7th and 8th around 65 to 70%. As I said, all 4 ships will be delivered during the current financial year. Coming to the 3rd naval project, the next generation offshore patrol vessel, the first ship has already been launched, and the 2nd ship is being launched on the 11th of this month, next week. The 3rd and 4th ship shall be launched during the 3rd and 4th quarter of the current financial year. These ships shall be delivered commencing Q2 FY28, the first ship, and the last ship shall be delivered during Q2 FY29. Coming to the research vessels, all the 3 projects we have started physical construction, and the ocean research vessel has touched a physical progress of construction of about 20%. The acoustic research ship about 12%, and the coastal research vessels about 5%. The coastal research vessels, the keel of these vessels shall be laid during September, which is an important project milestone. The ferry project for the government of West Bengal is progressing smoothly, and we intend delivering 2 of these platforms in September and October, and the balance vessels of the projects shall be delivered by April 2027. The dredger project for the government of the government of Bangladesh is progressing smoothly, and we are currently at about 70% physical progress of construction. The multipurpose vessel project for the German client is progressing smoothly. This is a 12-ship project. We have already commenced the production of 5 of these ships, and the balance shall follow as per the contractual schedule. This in a nutshell gives you the current order book position, the composition, the status, and the execution plan. Now coming to the orders on the anvil. As you are aware, we are the L1 shipyard for the next generation corvette project. It's a high value project, and we expect the contract to be signed anytime now. We are waiting for the contract conclusion, and this will give a much required boost to our order book. As I also mentioned, 2 contracts. We have received the letter of intent very recently. That is a platform support vessel for the ONGC and the green tug for the Shyama Prasad Mukherjee port. 5 tenders are currently live from the Indian Navy and the Indian Coast Guard. Indian Navy has a requirement of 120 fast interceptor craft. The order value could be to the tune of around 3,500 crores. The bid submission is due next month. Similarly, 31 waterjet FAC project, 31 follow-on waterjet FAC project. This is the Indian Navy project. Again, here the order value could be to the tune of around 3,500 crores. 22 interceptor boats for which the bids have already been submitted. The order value could be to the tune of around 1,200 to 1,300 crores. 6 next generation offshore patrol vessels for the Indian Coast Guard, about 2,500 crores. And the much awaited 7 P-17 Bravo. It's a high value project again. The AON value, the DAC AON value of this project is 70,000 crores. So all these 5 projects of Navy and Coast Guard that are currently live, the total value could be to the tune of plus 80,000 crores. 80,700 crores is the expected order value. 2 more projects, Indian Navy's projects, the RFP is expected to come out during the current calendar year. The 12 mine countermeasure vessel project, as per the RFP conditions, it is expected that this will be split between 2 shipyards, 8 and 4, and the AON value as accorded by the DAC is 36,000 crores. Similarly, another big ticket item, that is the landing platform dock, 4 LPDs. This RFP is expected to come out during the calendar year. The order value is to the tune of around 35,000 crores. So, in a nutshell, about 80,000 crores RFPs are currently live. Nearly 70,000 crores RFPs are expected from 2 of these projects. That is the NCMB and the LPD in the current calendar year. And in addition, what I had just mentioned is only about the defense orders, that is both from the Navy and the Coast Guard. In addition, based on the demand aggregation of the non-defense PSUs, that is GAIL, ONGC, BPCL and so on, few tenders are already out. The MR tanker, 4 MR tanker, the tender has already been published. 6 very large gas carriers, VLGC, 6 Astromax vessels, and another tender, high-value tender for container ships is expected to come soon. So in a nutshell, if you're taking the defense sector alone, about 150,000 orders, crores worth orders are expected in the near future. Nearly 80,000 coming from the RFPs which are live, and about 70,000 expected from the RFPs which are expected to be likely to be published during the calendar year. This is excluding the NGC for which we are expecting the contract signing soon. Coming to our expansion plans, as I have reiterated during the earlier conversations with the analysts and investors, our current shipbuilding capacity is for current construction of 28 platforms. With the ongoing modernization within our geographical premises, we expect this to be increased to, we intend increasing this to concurrent construction of 32 platforms by end of the calendar year. And we feel this capacity would be inadequate to meet the huge demand that exists both in the defense and non-defense segments. So it is with this intent that we have decided to go in for both brownfield and greenfield expansion, both on the western and eastern seaboards. In West Bengal, we already have 4 shipyards, 3 dedicatedly for shipbuilding and 1 for ship repair. In addition to this, we have taken 2 more premises on long-term lease basis from Shama Prasad Mukherjee Port, and the expansion and revitalization projects for these 2 facilities have already commenced. In addition, we are setting up a shipyard in West Bengal, Raichak, which is closer to the sea, and we expect the necessary approvals to be accorded during the current calendar year, and we will commence the infrastructure build-up from 2027. This project is likely to take, as with any shipbuilding facility creation, this will take about 3 to 5 years of fully operationalization. Similarly, on the western seaboard, we are setting up a full-fledged total ship solution facility. That means a facility that would encompass shipbuilding, green ship recycling, and ship repairs. This we intend proceeding on a PPP model, and we again expect the necessary approvals to be obtained during the calendar year, and the project would commence next year. Again, expected to take 3 years for the operationalization and the operations to commence in that facility. In addition, we are focusing on technology, new technology adoption, and maximizing use of robotics in our production processes, both in core shipbuilding as well as in daily bridge fabrication. This in a nutshell gives you about our financial and physical performance, our order book status, current project execution plan, and the orders on the anvil, and also a glimpse on our expansion plan. With this, I conclude my opening remarks, and the floor is open for questions, if any. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then 1 on their touchtone phone. If you wish to remove yourself from this question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Your first question comes from the line of Amit Dixit with Goldman Sachs. Please go ahead.
Hi. Good evening, everyone, and thanks for the opportunity. Congratulations for a good set of numbers, sir. A good set of numbers again. 2 questions. The first one is on next generation corvettes. Now, the order has been on anvil for quite some time. Just wanted to understand where is it stuck. Are there certain concerns around the orders that have been raised by the relevant authorities? Just wanted to get a brief construct of this, sir, because this order has been struck for quite some time. Part B of the question is, assuming the order is given to us, let us say today, then how much time will it take for us to actually start recording revenue?
Thank you. Thank you for your compliments on the results. Yes, I would like to state that this is the 17th quarter on a trot that our financial results have been on an upward trend, and hopefully we'll be able to maintain this tempo in the coming quarters too. Coming to the much awaited next generation Corvette project, yes, the project contract conclusion has got delayed a bit. We were expecting the contract to be signed either during the end of the last financial year or during the first quarter. But we are confident that the contract would be signed this quarter. And we don't see any red flags with respect to the contract conclusion. That is our appreciation. And to answer your question as to when the revenue recognition would commence. Now, this project has got, as per the RFP conditions and naturally the contractual conditions, this has got a pre-production period where the design studies would take place and the material ordering, the equipment ordering will take place. The first revenue recognition will commence next year, that is the financial year 28. The revenue recognition will commence from financial year 28 when we will be utilizing the activities involved in design and the binding data information which we need to progress with the preparation of compartment design and the equipment layout. So this revenue recognition will start from the next financial year, assuming the contract is signed during this quarter. Now, in shipbuilding, we have a very peculiar kind of the revenue recognition pattern, where the initial phase, that is, for example, if a project is a 5-year project, the first year the revenue recognition will come through the design-related inputs, which will contribute maybe to 5 to 10% of the project cost. Then the physical construction, that comes the second phase, which should be between, let us say, the first year to the 2.5, that is 50% of the project duration, where the revenue recognition will move up to about 20 to 25%. And then comes a very steep upward revenue recognition curve, where the equipment and systems which have been bought are lowered onto the ship and the integrations happen. That is the phase where the maximum revenue recognition happens. And then, of course, the outfitting and the project completion. This is the broad revenue recognition pattern. To answer your specific question, yes, the revenue recognition will commence from the next financial year. Thank you.
And how much time it will take for this order to be completed, NGC order?
NGC is a 8-ship project where 2 shipyards are building concurrently, and the first ship delivery is after 5 years, and the project completion is 8 years. 8 years is the project completion time which is given. That means if the order is placed now, the 8th ship of the project, these both shipyards put together, would get completed by 2034, 35. That's what I would expect.
Very clear, sir. The second question is essentially on the latest AON trend that we have seen, particularly for Navy. There is a lot of emphasis on the unmanned vessels and autonomous platforms. So just wanted to understand our preparedness for that. Does our expansion plan also is focused on building certain capabilities on that front, or we already have those capabilities and we will be bidding for such RFPs as and when they come?
Yes, very interesting question. To answer your second part first, whether we have the capability, yes, we have the capability, and it is with this intent, because we were clear that the Navy having a very clear autonomous roadmap. So we were clear almost 3-4 years before itself that the Navy would go in, Navy and of course followed by Coast Guard would go in for an autonomous environment where a large number of unmanned vessels would come in. So we started with the prototype development of an unmanned surface vessel, successfully proved. And just for information, that We have also executed a project for the NSTL, Naval Scientific and Technological Laboratory, Visakhapatnam, a DRDO organization for an unmanned surface vessel. In addition, an autonomous underwater platform, which was developed by us, again the prototype successfully proved in the Pangangso Lake about a year back. So we are technologically competent and technically ready for execution of these projects. Now, we have been actively participating in the make projects of the government steered by the Navy. For example, for the ASV, that is the ASV MC, and there is a project which the Navy, an autonomous project which the Navy is steering. We are very much there. We are one of the companies taking part in that. We are again being shortlisted for another project of the Navy, which is again for an underwater unmanned platform. So we are very much competent and interested and also actively taking part in these schemes and the projects which Navy has come up for autonomous unmanned platforms.
Great.
Thank you.
Thank you so much and all the best.
Thank you.
Thank you. Your next question comes from the line of Dipen Vakil with Phillip Capital. Please go ahead.
Thank you for this opportunity and congratulations on a great execution quarter, sir. So my first question is on the line of your CAPEX announcement that you did. So can you help us with the quantum of CAPEX that you are envisaging for Greenfield as well as Brownfield side of it? And what kind of capabilities will it add to your current existing ecosystem in terms of whether the dry dock size will be the bigger one, especially in Gujarat, and how will it help you address the bigger and sizable opportunities either in defense or commercial side of it? That's my first question.
Thank you. We have a very clear expansion plan, in turn a clear CAPEX infusion plan. Now, if I divide this into two buckets, one is the minor projects that we are undertaking, again with a very, very clear, let us say, capability enhancement pattern. For example, 2 parcels we have taken over from the Kolkata port trust, that is Shyamaprasad Mukherjee port, where the capital infusion is limited, where we already commenced the revitalization. And there the capital infusion is expected to be just about 200 odd crores. This will complete within a year and a half, 18 months we'll be able to complete that. Coming to the larger projects, we are just undertaking 2 projects. One in West Bengal, I mentioned it's towards the sea. The land is already with us again on a very long-term basis, a long-term lease from Kolkata port trust. Here we are creating a full-fledged shipyard. We expect the capital infusion to the tune of the DPRS in its final stages. So I'll be able to give you only an approximate figure. It will be about 2,200 crores, which the setting up of the facility would take 3 to 5 years because it is a completely greenfield setup. Coming to the west, what we are intending here, the DPR is complete. The environmental clearance has already been obtained, which means this project is moving at a much faster pace. The capital infusion would be to the tune of around 2,000 crores. This will be a total ship solution facility, as I mentioned during my opening remarks, that this will comprise of shipbuilding, green ship recycling, and ship repair capability under a single roof. Now, coming to the specific question which you asked as to what does it add to our current capability. One, our current capability, as I mentioned, is to undertake shipbuilding, concurrent construction of 28 platforms. When I say 28 platforms, that include platforms up to about 10,000 ton displacement and 200 meters length. This would cater for most of the defense platform, but when we come to commercial ships, they're much, much larger in size. So there we have a difficulty at this moment, and that is the intent of creating these facilities. One, to circumvent the riverine constraints, and second, to obviate the length and displacement restrictions. So we intend, with the creation of these 2 facilities, the capacity constraint will be completely obliterated, and we will have the capability to build 43 platforms, and the 11 types of platforms that we have added, 11 number, that means from 32 to 43, there will be large vessels of Aframax and VLGC type. So this is the benefit this particular expansion projects that will go to the shipyard. Second is here in Kolkata, where our core shipbuilding facilities exist, we'll be utilizing them, focused towards defense shipbuilding, and the facility in Gujarat. While we will use spare capacity there for warship building, but the primary focus will be for green ship recycling and building of large size ships. I hope I answered your question. Thank you.
Absolutely, sir. So, second question is, you mentioned about the tenders which are already out on the commercial side, namely MR tankers, VLGC, Aframax, and even the container ship tender which is expected soon. So, sir, right now, how does our technological capability stand for these large size carriers? And at the same time, how do we participate in this tender with the current capacities? Are we looking to partner with some company or take some tech from foreign company? So how are we participating in for such commercial vessels?
Okay, to start with, during the initial discussions I had mentioned, we already won an order for a set of 4 platform support vessels, and I'm going to understand that this is the first order to be awarded, the letter of intent to be awarded for among the lot that has been aggregated by the MOPSW from all the PSUs. So we are happy about that. Now coming to the next few projects, there is the MR tanker, the VLGC, and of course the container ships. MR tanker, we are collaborating with one of our sister shipyards, and so are we doing so for the VLGC. In the VLGC tender itself, there is a condition that of the number of vessels they have promulgated, I think it's 8 ships they have promulgated, 2 of them have been built at a shipyard which has already got proven capacity in building of VLGCs. So we, along with our partner shipyard in India, we already tied up with one of the foreign shipyards with proven capability, and we'll be bidding together. We means the 2 Indian shipyards will be bidding together for this. Coming to the container ships, yes, currently we do not have the physical capacity because the size of these ships are large, but we are going in for a partnership with one of the other Indian shipyards who has got the dock and berth infrastructure to handle this project. So we have a very clear strategy for addressing the limitations that we currently have so that we don't miss out on any of the high value orders which are coming from this non-defense segment. Thank you.
That is very encouraging to hear, sir. Thank you so much. Sir, if I can squeeze in one last question. Sir, can you help us understanding how the execution momentum in FY27? Will we maintain the similar execution momentum, or do you expect some softness in growth numbers from say for 35 to 40% might get slightly lower in FY27?
Currently, we are in an execution phase. Actually, if you see last year, we have delivered 8 ships. So naturally, when the ships are delivered, the revenue and in turn the profits would increase. We are still in that phase, but we all must be clear that the current order book is 13,596 crores. And of this, the 2 projects which are major, which means the P-17 Alpha and the anti-submarine shallow watercraft. So, for example, the P-17 Alpha, we are left with about 4,500 crores, and the anti-submarine shallow watercraft about 1,816 crores. And these are the major projects which are on the anvil of completion. So the current quarter performance will be able to replicate in the coming quarters too.
Got it, sir. Thank you so much for answering my questions, and all the best for FY27, sir.
Thank you.
Thank you. The next question comes from the line of Kavish Parekh with 360 ONE Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. My question is on GRSE's indigenization levels. Sir, could you elaborate on the current level of indigenization across our portfolio and also identify the key systems, subsystems, or components where we continue to remain dependent on imports?
Okay, thank you. Very interesting question, and this has been the focus of our government also, indigenization. See, one thing we all must clearly understand that we are platform integrators. when naturally GRSE being guaranteed shipbuilders and engineers, the other part, the engineers part, I will answer separately. But coming to the shipbuilding part, we are platform integrators. So when we are platform integrators, most of the equipment and weapons, or let us say the propulsion engine, they are all nominated by the customers, be it defense shipbuilding or be it commercial shipbuilding. When the nomination comes from the customers, for example, if a customer wants, a commercial ship customer wants an engine of, let us say, German make, we have to procure the German engine, which is a contractual obligation. And therefore, expecting indigenization there would be an infrastructure exercise. However, with respect to warship building, I will segregate this into 4 components: float, fight, move, survive. If you're taking the float component mostly comprises of the ship's hull, where the stability aspects are involved. India has achieved, and so has GRSE achieved, 100% indigenization. But the float component comprises only about 10% of ship cost. Then comes the fight component. Fight component comprises of the weapons and systems. Here I'm happy to inform you that from a very, very modest indigenization percentage, we have gone up to almost 60% indigenization today, with many of the Indian defense manufacturers are producing weapons and systems, including my sister company, that is Bell, for the sensors. Now coming to the float component. This is where currently there is a catch, because move comprises of the propulsion engines and the power generation and associated equipment. Here, while power generation, that is the diesel alternators, we are 100% indigenous. In case of propulsion engines, we have still not achieved indigenization, where the government has already initiated both for the marine gas turbines as well as for marine diesel engines, but this will take a finite amount of time. Coming to survival is the firefighting equipment, the safety equipment, and so on. We are about 70% indigenous. So net, if you take 100% cost of a ship, we are talking by value. In the last few projects, 2 projects I will just take, which we have completed, the anti-submarine aircraft. Since 4 ships already been delivered, we know exactly what is the kind of indigenization that we can achieve. And the survey vessels large, which we already completed the project. There we have plus 80% indigenization overall. This is for the shipbuilding sector. Coming to the other sectors, let us take Bailey Bridge, which is one of my business verticals, where it is 100% indigenous. Every component is fabricated, including sub-components are fabricated within from Indian source, a source from India, and fabricated here. So it's 100% indigenization. Coming to the other product, let us say marine diesel engine, we have a collaboration with one of the foreign OEMs for co-production of a marine diesel engine. When the project fructifies, the indigenization level would be about 55 to 60%. If you're talking about deck machinery, another business vertical of GRSE, we have about 90% indigenous content. So this is where we stand as of today. But then again, I go back to my first statement with respect to indigenization, that while all of us, the entire ecosystem is striving towards indigenization, it has got its limitations and the time implication. Because indigenization does not come with like a switch getting on, it takes time. So currently, we are, let us say, about 80-85%. Maybe it will take about 5 to 10 years of achieving 100% indigenization. Thank you.
Very decent, sir. Thanks a lot for that. Sir, as a follow-up on the defense side, which domestic suppliers, in your view, are best positioned to substitute these imported components as procurement within the company becomes increasingly indigenous? Which private sector companies do you think could emerge as meaningful beneficiaries? And lastly, also within the defense electronics part, apart from Bharat Electronics, which suppliers currently have a meaningful wallet share with us?
Very interesting question. Now, see, almost all the major private companies are into defense manufacturing. Be it L&T, be it Adani, be it Mahindra, be it these days Kalyani. All of them are in defense manufacturing, and each one of them have contributed extensively towards indigenization. So I think that gives you a broad answer about which are the major private companies. I may have missed out somebody, but I just hinted that this is the big companies. Now there are a host of startups But today in India, about 17,000 MSMEs, about 1,000 startups and about 675 innovators are involved in defense manufacturing. And most of them are focusing on new technology based, and I'm talking about the innovators and startups. Most of them are focusing on new technology based indigenous production. Here, the limitation is there is still a percentage which is coming from abroad. So to encourage the startups and innovators, we ourselves, GRS, my company, has taken an initiative and started a open challenge scheme for startups. So we kept an acronym called GAINS, GRSA Accelerator Innovation Nurturing Scheme. Believe you me, the response has been overwhelming. About 101 startups took part last year. So the entire ecosystem is striving towards indigenization. Let us see how it moves or how fast it moves. Since you asked the question of BEL. In addition to BEL, of course, HAL is a major contributor towards indigenization. We also have some links with HAL because the marine gas turbines come from them. Of course, it is rooted from abroad, but certain amount of indigenization takes place there. ECIL is a part of indigenization, and there are other PSUs like Kelton who also are contributing towards supplying indigenous products to shipbuilding. Thank you.
Thanks a lot for that, sir. Very, very detailed explanation. Hope to see the long-anticipated contract getting signed soon. All the very best.
Thank you.
Thank you. The next question comes from the line of Himanshu Pandey with Shanvika Motors. Please go ahead. The line for the current participant has been dropped from the queue. We'll move on to our next question. But before we take the next question, a reminder to all the participants that you may press star and then 1 to ask a question. Your next question comes from the line of Harshit Kapadia with Elara Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations again for a good set of numbers, sir. Would you be able to share the order book breakup for GRSC, sir?
Thank you, Mr. Harshit. Order book total current is 13,596.26 crores. Within that, the shipbuilding contributes nearly 95%, that is 12,980 crores. With the other verticals, that is ship repair, about 96 crores, the Bailey Bridges, 150. The naval surface gun, 219 crores, Bailey Bridges, 158 crores, the deck machinery, 58 crores, and our diesel engine plant, 82 crores. Now, I'll just give you a breakup of the shipbuilding order book breakup.
Sure.
P7 in Alpha, the last ship, 4,519 crores. The anti-submarine shallow water craft, about 1,815 crores. Survey vessel large, we are left with about 225 crores. The NGOPV project, 3,075 crores. The ocean research vessel, 740 crores. The acoustic research ship, 450 crores. The coastal research vessel, 458 crores. The ferry, 203 crores. Multi-purpose vessels and the dredger put together about 1,355 crores. So about 74% of the shipbuilding pie is from the 4 naval projects, and the balance 25% is coming from the non-defense segment. There was a period when 98% of the shipbuilding order book was comprised of defense orders, but now the split breakup has been different, mostly because we have been executing the research ship projects for various ministries and, of course, the export orders. So this, in a nutshell, is the breakup of our current order book. Thank you.
Thank you, sir. Just one more question, sir, on the P&L. Probably if you have answered this question, I'm again sorry for reiterating. On the other expense side, the other expenses have reduced significantly. Was there any one-off here, or what would you attribute here this to?
Once again, could you repeat the question, please?
So other operating costs have come down significantly in this quarter in Q1 FY27 results. So what would be the reasons for that, sir?
Other expenditure coming down.
Yes, sir.
1 second. In the last quarter, we had 3 of the ships which were commissioned. So the last phase of commissioning, a certain amount of expenditure was incurred for these activities. So the current quarter, we did not have such occasion. So that has resulted a drop in the other expenses. Thank you.
Okay, sir. I'll come back in the question queue, sir. Thank you.
Sure.
Thank you. Your next question comes from the line of Kashyap Ramesh, an individual investor. Please go ahead.
Hello, sir. Congratulations on a great quarter. My question is on exports. After the German order, there is nothing significant coming a bid pipeline or anywhere. You are not mentioning anything about exports. So does DRSE bid for export? You are a Navratna. Do you have the freedom, or again it should come from like a intergovernment thing?
Okay, thank you for the question. Firstly, for exports of non-defense platform, we do not need any government approval if the item is if the product is getting supplied to a friendly foreign nation. Now, defense exports mostly are through G2G tie-ups, and so we rely on our government for defense exports. Coming to the non-defense exports, you had mentioned that we have not gone in for any export orders after the multi-purpose vessel contract. It's a very conscious act. When we went in for multi-purpose vessel, obtaining the multi-purpose vessel export order, at the point of time, our government had not aggregated the demand of the Indian non-defense requirements. So now the demand has been aggregated and the opportunities are fantastic. About 200 plus platforms are required. So when we have, yes, exports is interesting and we want to export more, we will export more. But right now, we are not taking any export order considering that there are huge opportunities available within India. Having said that, if an attractive, profitable and visible order opportunity comes from Europe or any of the other customers, we will take it up. So this is the strategy which we have taken. Again, to reassure you that there are enough opportunities available within India, and India looks to India for giving the product. Now, coming to the Navratna status. Navratna status definitely provides us the much needed autonomy for expansion, and we intend utilizing this privilege or the expansion autonomy to the hilt. Thank you.
One more question is, what about the water metro projects of Mumbai and other cities? Is GRSE actively bidding? Because I saw some of your officials meeting Mumbai metro water project people. So you didn't mention anything about that.
We are currently executing one project for the government of West Bengal. It is a World Bank funded project for 13 hybrid ferries. And we are also, actually you are absolutely right, we are pitching in with the various state governments for their respective water metros. And you want to understand that even Goa, they are coming up with a water metro development. I think they have engaged KMRL, the Kerala the metro, as the nodal agency for coordination. Yes, we are engaging with these various state governments. And as and when the RFPs come out, we will definitely take part, because this is an area where we are already established ourselves. Because our ferry that we have provided to the government of West Bengal is the largest and the fastest fully electric ferry in the country, and we intend leveraging and capitalizing on this edge that we have. And we will take part in the RFPs which are coming out. I expect some of them to come out in the coming 1 year. We will take part.
No,
Thank
you, sir.
Thank you. Our next question comes from the line of Yash, an individual investor. Please go ahead.
Hi, sir. Congratulations on a good set of numbers.
Really sorry to interrupt you, Yash, sir. Your audio is very feeble. Can you speak a bit louder?
Hello. Is it audible?
This is much better. Yes, sir. Please go ahead.
Yeah. Hi, sir. Good evening, and congratulations on good set of numbers. And so most of the questions I plan to ask, asked by the other participants. So I'd just like to reiterate the question which I asked in the prior calls, like, are you going for any bonus or a stock split? Yeah. So because other shipyards have done that, right? So that was the only question. Yeah.
No, sorry. Could you repeat the last part, the question part once again?
So I'm talking about any corporate actions that are in the queue, sir, like a stock split or something like that. So.
Oh, we're waiting. I understood. We are, as you are fully aware that this is controlled by the government, DIPAM, and we are waiting for their instructions on this. And whatever instructions come from the DP and DIPAM, we'll abide by that. Let us wait for their directives. Thank you.
Sure, sir. Thank you very much.
Thank you. The next question comes from the line of Alok, an individual investor. Please go ahead. Alok, sir, your line is unmuted. Please proceed with your question. As there is no response from the line of current participant, we'll move on to our next question. Our next question comes from Harshit Kapadia with Elara Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, your employee cost has also come down despite such a strong increase in revenue. Is that because since you're nearing ending the completion time, so mainly the contractual workers are reduced? Is it because of that?
Yes, you're absolutely right that the contract expenses are controlled. The deployment of contract workers varies from the project execution phase. In the final stages of outfitting, if you see the contract expenditure during Q4 FY26 would have been high, because that is when we delivered, in that last quarter we delivered 3 ships. So maximum deployment of personnel would have been there, and so the contract value would have been high. It's a sinusoidal thing. You will definitely see some increase in that in the coming quarter, because that is when we expect to deliver a couple of ships. So as you rightly said, it is purely on the project execution phase. No abnormality in that. It's very normal in our shipbuilding cycle.
Understood, sir. And just relation to that, just a second, sir. Just a relation to that, then next year is going to be the pay commission which will happen. So how much increase in employee cost can we expect? Will it be in the range of 15-20%, which we see earlier, or will it be lower, sir? Any number or any color on this would be helpful.
See, I agree. I understand the question. But our anticipation is that it could be of similar range, 15-20%, which is normal in every pay commission. We don't see any abnormality, and we have already factored this in our, let us say, future projections and calculations.
Okay, fair enough, sir. Okay, thank you, sir.
Thank you, Mr. Harsh.
Thank you. The next question comes from Pratap Maliwal with Mount Intra Finance. Please go ahead.